afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. These are the top headlines that we're tracking at this hour. Nifty recovers from the day's low and trades around the 10,400 mark. Metal stocks lead the gains, while PSU banks are the biggest sectoral losers. Oil marketing companies are the top losers on Nifty after the government asked them to cut prices by as much as ₹1 on petrol and diesel, but ruled out on an excise duty cut, while HPCL and BPCL see their biggest fall since September 2017, and IOC has seen its biggest drop since November 2016. Alchem Labs has declined in trade after the US FDA made 6 repeat observations on its Daman plant. The stock has now fallen for 8 out of the last 10 trading sessions. And Fortis Healthcare gains for the 5th day in a row after Manipal Health sweetened the offer for the country's second largest hospital chain.
Well, those are the headlines. Viewers, thanks for tuning into Countdown. My name is Neeraj Shah, and the markets well, actually not doing all that bad considering what they were doing at a point of time in the day when the Nifty Bank was down almost 1% and the Nifty itself was down in the red to the tune of about 1/3% or 1/4%. Right now, we're trading marginally in the green. So not a bad last 30-45 minutes of trade. I think the Nifty Bank will come up on your screen as well. And again, a bit of an uptick from the levels that it was trading at sometime in the early half of trade. Bring up the advanced decline ratio and the mid caps and the small cap indices. I don't know if there's a big movement in that pocket or no, because that doesn't tend to react so actively. So the market bit stays negative. I doubt that the mid caps and the small caps have really advanced too much from the levels that they were trading at. There should be a bit of flattishness to both of those indices. The heat map will show you banks perched on one side along with OMCs and IT companies perched on the other side along with the commodity names. So that's essentially even Stevens on the key benchmark indices and OMCs on the losing side, as well as some of the others on the gaining side. Actually bring up the oil marketing companies out here because BP, HP, RC or the oil sensitives are reacting duly. So BP, HP, RC are trading in the red, will come up on your screen, as well as stocks like Ceylon Oil Exploration, Aban Offshore, etc., which are again oil sensitives, are trading in the green. So fair bit of red on the oil marketing companies, decent enough green on some of the others. This is despite, of course, the oil marketing companies telling us on Bloomberg Quint that there is no interference from the government, no directive from the government to absorb the excess price hike as well. And I think IOC was categorical that they are not going to bear any kind of a subsidy burden. Even HPCL had similar things to say, but that has failed to revive any kind of sentiments on the oil marketing companies. Just a few other things which are trending today. I need to bring it up. Aside of course, what's happening to oil marketing companies, a couple of other pockets that we need to mention. Firstly, technology is back in focus, so led by HCL Technologies, but a couple of other stocks giving company as well. Infosys, TCS, etc. are all doing rather well for themselves in the session today. So that's one basket which stands out in trade. Beyond technology, there's of course what's happening to the commodity names. So Vedanta, Hindalco, Nalco, all three of them in the green. So good going for each of these indices, each of these stocks as well in the session today. And then stocks which are trading at new highs. So you have the likes of Astral Polytechnic, you have the likes of Shakti Pumps and the likes of Dilip Buildcon, which have nudged much higher in the session today. This was despite the markets not doing all that well. So good moves for these names. But what about the liquid universe, Navneet?
Well, Neeraj, good news is that we're off the day's low. In fact, we opened above yesterday's high of 10,424, but from those levels we retreated. And for majority of the session, mind you, the market was trading in the red, but just in the last half an hour, we've seen a bit of recovery coming by. Let's see if we can close above yesterday's high of 10,424 or not. But for the time being, if you look at the futures of Nifty or the Bank Nifty, there has been open interest addition that has been seen. For Nifty, it's up almost 5%. The premium is somewhere about 11 to 12 points. Remember, the premium has been going down in the last few sessions and it has been fluctuating a lot. For Bank Nifty, which added nearly 14% in open interest yesterday, that's been under pressure since the morning trade, but some bit of recovery has been seen, and now open interest for Bank Nifty futures is trading up nearly 7%. Also in the last two sessions, Bank Nifty futures were trading at a discount, but now I guess it's fluctuating between discount and premium, so watch out for that one. Let's just pull up the India VIX. I guess that too has been trading with some bit of gain. So up almost 1%, not a great or a comforting sign for the bulls. In terms of options data, if you look at the out-of-the-money call strikes for the likes of 10,500 and even the 10,600 strike, both of them have added between 6 to 8 lakh shares as we speak, and the 10,700 has seen huge amount of unwinding of nearly 10 lakh shares. Whereas on the put side, now it's a fight between the bulls and the bears for the 10,400 mark. So if you look at the 10,400 strike on both call, put, there has been a massive addition, but on the put side, in the last half an hour of trade, when the market recovered, almost 3 lakh additional shares were added. So now total 9 lakh shares have been added for the 10,400 put. Let's see if we close above that mark or no. In terms of stock futures, IRB Infra, that's your top F&O gainer for the day. It's gone up on very high volumes on the cash side. It's also touched its fresh 52-week high in today's trade, and some fresh long positions have been seen for that one. Neeraj spoke about the oil marketing companies which have been under pressure. So look at BPCL. It's fallen on very high volumes on the cash side as well. And if you look at the April futures of PPCL, that's indicating some fresh shorts have been built up in today's session, Neeraj.
Well, let's stretch that point further, Navneet, with commodity expert as well, James Davis. He's Director of Short-Term Global Oil Services at Facts Global Energy, joining us on the show right now. One about oil. Maybe we'll ask James if he can comment on some of the other commodities too. But James, thank you so much for taking the time out and speaking to us at Bloomberg Quint. What's the sense? Is this whole chat around Saudi Arabia's desire to have oil at 80 because of various reasons, one on the economy, two on the Aramco IPO, something that you see is feasible? Do you see oil prices moving up in that direction?
Yeah, I mean, it's well, firstly, thanks for having me on the call today. Yeah, the comments from Saudi Arabia looking for $80 a barrel is certainly going to give a lot of sentimental support to the markets, and that's one of the driving factors. But ultimately, this is coming on the backdrop of what is a very tight crude market at present, and there's a lot of very bullish indicators that are driving the price too. We've come off what we always knew was going to be a relatively weak period for crude demand through refinery turnarounds, and as we're emerging from that, the demand for crude is going up and the prices are going up with it. When we look at one of the key markers, the days cover of crude and total products, as we move through Q2, we're going to move to some very, very tight levels, and that's going to keep the market incredibly supported. In the immediate short term, yeah, $75 a barrel is the sort of target that we're looking at, and Saudi Arabia's target of $80 a barrel is certainly not out of the question.
James, there have been reports that the OPEC countries will look to extend the cuts which were there at least till 2018. And if that gets extended to 2019, if you could just tell us what sort of levels can one watch out on crude prices?
Well, the discussion from OPEC about looking to extend the cuts is an interesting one, because they've already hit their initial target that they were setting out. As far as the numbers that we're looking at are concerned, we think they probably hit the 5-year moving average of OECD stocks back in February. They're probably going to get told that by IEA data either this month or next month, and so they're now looking for an even lower target so they can keep this process in place. For them, it's very important that they have a target that's not been reached to help make sure they still have a lot of cooperation, cohesion, and compliance to these cuts. And so that's what they'll be looking to do. We believe that they will look to extend it into next year. But something that needs to be considered as well is what's happening with the countries such as Venezuela and also Iran. Venezuela is producing well below its production cut quota at present, and that in itself is creating a huge amount of shortfall in the market. Some people would say the US is going to fill that gap, but it's nicely balanced. Another big unknown is exactly what will happen to Iranian crude sanctions or overall sanctions from the US. The actual impact of that, if Trump decides not to roll over the current deal in May not take effect for at least 180 days post that. But again, we're looking at what could be lower supply from Iran by the end of the year. So on top of OPEC looking to extend the cuts next year, you've got even more bullish factors from these two countries weighing in as well. So the outlook for crude prices is very, very bullish versus the current forward structure.
You'll be able to share some levels, James, say the next couple of months, where do you expect crude to trade at?
Well, if we think about it from a day's cover perspective, we're looking at stocks dropping down to levels as low as 56.5 days cover, which is even tighter than we saw in January when the market was pretty supported. So upwards of $70 to $75 a barrel from here. By the time we get to year end, the stocks may have tapered slightly depending on what happens to US production growth, but 70, 75 is definitely where we're looking at for Q2, and then 75 and potentially a bit higher as we go through the end of the year. We do have a little bit of a respite in how tight the market is going to get emerging at the beginning of next year. And so we do see stocks trending up maybe slightly higher, more towards 58, 59 days cover. And the important point to note is 60 days cover. 60 days cover was the point at which the markets flipped from contango to backwardation last year. And we may get towards there at periods during 2019. So there is a little bit of downside risk to prices from the levels that we might see through Q3 2018 as we move through 2019. But then we have the IMO that's staring us in the face in 2020 that's going to have ripple effects all the way back through 2019. And we're going to start seeing some very interesting dynamics, especially for light sweet crudes, as we move to the second half of next year. So again, that will bring back another wave of support, and we'll see prices back up into the 70s and 75s, if not higher.
Right. James, besides crude oil prices, the other commodity which has been making news since yesterday, or rather since Friday, when US levied sanctions on a couple of Russian companies for the likes of Rusal, we've seen the aluminum prices surging. Any sort of levels that you see there, because now the production will be lower, and I guess Rusal was exporting almost 10% of their production to US.
I have no view on the aluminium price. I'm sorry, I only look at oil.
Okay. All right, James, we'll leave it at that note. Thanks a lot for joining us and taking us through your views on the crude oil prices.
That's interesting, Naveen. And just wondering what could happen. A bit later on, Somit will join in and speak about what would happen to the different OMCs as a result of the price hike, and what's the kind of absorption that they have to take if they're made to do that. But the market is not convinced.
Interesting point that the management of IOC made. He was sounding so confident that now we are in a regime where prices are fixed every day. Both petrol, diesel are now deregulated. So he was saying he doesn't expect the government at all to interfere now, to ask these companies to absorb any sort of price increase. But I think Somit also made a very pertinent point. He was saying that considering this is a year when there are a lot of election, any sort of move on that front would only benefit, let's say, the masses of India.
Yeah, but the last time that the whole expectation of there being a government move to get OMCs to bear the burden, the government made it aptly clear. I mean, there was, I think, about a month ago, 2 months ago, there was this spike, and then the whole conversation shifted to the government will have to do it because elections are up and about. Gujarat elections, Gujarat elections. And we saw that the government played its part, held true, and did not ask the OMCs and did not interfere with them. So I think this fear is more of people trying to preempt what will happen as opposed to what will actually happen. One only hopes that we finally entered into a regime wherein prices, in a manner of speaking, are deregulated, at least on the OMC front.
Right.
And one only hopes that doesn't reverse.
Even if a move like that comes about, Neeraj, I think it will be important to see whether they tinker with the export duty or not. If they don't, then it's going to be a very, very big negative, let's say, for the OMCs, because somewhere they have to offset.
Let's wait and watch. By the way, speaking of oil and Saudi Arabia's attempt to get oil prices to $80 a barrel, well, it will pinch the Indian economy hard for sure, as the Indian country's imports more than 80% of the annual requirement. In an interview with Bloomberg's Horden, ahead of the International Energy Forum, Oil Minister Dharmendra Pradhan said that the government wants to see prices at about $50 a barrel to manage its finances better.
For us, it is too high. India is a very price-sensitive market. We are being a net consumer. We need a reasonable price. We need a responsible price. $70 is too high for Indian market.
What price would you like to see oil at?
We never expect a low oil price. We know continuous investment is needed in E&P sector. Unless until you have a continuous investment, sometime cascading negative impact may bounce back. Knowing that, we don't see any reason why it will be so high. It should be reasonable, it should be responsible. For Indian consumer point of view, I'll be more than happy if the price is around 50 plus.
Bloomberg News' Javier Blas had an exclusive story out today that the Saudis are said to be targeting a price of $80 a barrel. What would that mean for India?
It will pinch India in a big way. I think Saudi is a responsible country. They know last month, Saudi oil minister, Mr. Al-Fali, was here for our bilateral discussion, had a very long discussion. And I think rebalancing will be there.
Do you think that's too optimistic, $80 a barrel, for them to be targeting that?
I am not an astrologer. I am not in our oil industry, there is a say, nobody can predict oil. Not Bloomberg or Indian oil minister, nobody can predict oil. So, but I will expect, being our size of economy, we will expect a reasonable price. And I hope the producer will be not so irresponsible in that way.
His Excellency Khalid Al-Faleh will be here along with the Aramco CEO. Are you going to mention this?
We have a very cordial relationship with Saudi Arabia. Saudi Arabia is a very reliable partner of India since long and will be continuing to be a good partner. And Excellency Fali will be in the inaugural function, and later on we will have a bilateral meeting, and certainly I am meeting Mr. Nasir Yamin, the CEO of Aramco. I think the world industry, world oil industry leadership will be looking into today. Gone are the days of any one of the section can monopolize the other one. Whether it is consumer cannot monopolize producer, producer cannot monopolize consumer. There must be a fine balance between both the segments. And I am confident the industry will look into the aspiration of the old entire gamut of the...
Will you be signing any deals with them tomorrow?
We have an engagement, big engagement with them. We are talking to, both of us are talking to each other regarding their participation in our one of the mega project in western coast of India.
Well, that's Dharmendra Pradhan speaking about how higher oil prices might pitch. It's certainly pinching the oil marketing companies for sure. Well, on the topic of that, let's get in a top futures and options derivative voice and a market voice. Tushar Mahajan, head of derivatives at Nomura India, joins us right now on the show. Tushar, good having you. Thanks so much for joining in. Been a while, but this market is, after a long time, or at least after 5 or 6 weeks, is starting to show some signs of there being continuous buying. What have you guys been doing at your desk? What have been client feedback, and what are you advising clients to do from here on while we are at the cusp of the earnings season?
So I think the last few days definitely have been good for India, and I think more than just continuous buying, I think the biggest takeaway over the last few days has been that we finally started outperforming the regional markets. So that's, can you hear me?
Loud and clear, Tushar. Loud and clear.
Okay, sorry, I thought I lost the line. So yes, I think the big story over the last few days has been the fact that we've returned back to outperforming our regional markets, and that's a fairly healthy trend given the fact that over the last 2 months of February and March, the big underperformance that India has seen. At this stage, clearly we've been blessed with a relatively dovish statement from the RBI, which spoke about inflation forecast getting down. I think the bond markets have been rallying also on the fact that the borrowing calendar, etc., has been good. So on the equity side, we've continuously seen that inflow into domestic funds, which has been supportive of this market. we've had a good run up over the last few days. I think this probably continues into earnings as well, given that most people now expect that earnings recovery in India is truly and well underway, and that should be pretty much seen in the quarterly results starting Friday. So I think that's going to be the big tailwind for India. Having said that, I'm a little concerned over this overnight oil price move, which you were also just discussing before this. And that, oil, a big move in oil is always a headwind for India from multiple aspects. So I think that's the only thing that we probably at this point need to watch out for. Otherwise, the earnings should provide a good tailwind to the markets even from these levels.
Hi, Tushar. Good afternoon. Well, we'll be waiting and watching out for the earnings as Infy comes out this week. But overall, Tushar, if you look at the start of the April series and if you also look at the FI positioning, they've been net short on index futures. And last two series, which were weak for the markets, we've seen, at least on the futures and options side, FIs have been on the right side of the trade. What have your reading been of the FI positioning so far into the April series?
So I think at this point in time, while the positioning started off as short, we've seen some kind of covering, but there's no, from a positioning perspective, we don't see like a mad panic rush to cover their positions. There is still a little bit of a disbelief amongst the foreigners whether this rally sustains beyond current levels. Especially I think everyone's looking at that 10,450 to 10,500 points range, which is really just about a stone's throw away from where we are currently trading. So there's no panic rush. I think positioning wise, what people have been also doing is that some of their cash position holdings have continuously been hedged on the futures side. And that's a trend that's why you kind of see also these kind of future numbers. So nothing massive to worry about per se, but clearly I don't think we're seeing like a panic in terms of short covering.
Okay, and we've seen some good run, for Bank Nifty and also a couple of the banking stocks, considering they were all beaten down in the recent past. Would you attribute the 1,000-point rally that we've seen on Bank Nifty only as a result of short covering, or are you seeing some fresh, genuine buying coming into some banking counters?
I would probably think of it more as short covering. I think that's really what we kind of saw. This recent rally on the Bank Nifty side. I think given the continuous news flow around Bank Nifty, earlier it was really limited to the negative news flow seemed to have been limited to only the public sector banks. Now you're seeing private sector banks getting caught in that imbroglio. I don't see that Bank Nifty is going to be outperforming Nifty from here on in a fairly significant manner. I think Bank Nifty is probably very surprising for Indian markets, but I think over the next few weeks, Bank Nifty is probably not going to be leading the Nifty move. It's probably going to be lagging the Nifty move.
Okay, let's see if that takes place or not, but we've actually reclaimed the 25,000 mark on Bank Nifty. Tushar, I want to talk about the IT space, which has been pretty active in today's session. Nifty IT has seen gains of over 1%. Well, Infosys numbers will be out this Friday, and probably on back of that, we're seeing some buying taking place. But overall, how are you looking at the positioning? Because this is one space on YTD basis which has been outperforming the markets.
So for most of 2017, this was a space which had seen a reasonable amount of negative news flow, was a very favorite sector for shorts. I think we saw that trend change in Jan, and that's something which, from being net short 4 months ago, the trend has moved to covering the shorts and now being net long. I think that trend continues to be there on the IT space. Everyone's pretty convinced that there's a global recovery underway, and I think IT stands out to benefit on that front. Second, we've had a decent move on the USD INR as well, I think, which is again another tailwind for the IT space. And third, you do think that margins could probably surprise positively on over here. So I think IT as a space overall, and both mid cap as well as large cap IT are in a sweet spot right now. Positioning is clearly long, and there don't seem to be any massive triggers for that positioning to also change suddenly.
And besides IT, Tushar, which is the other sector or space where you're seeing net long positioning coming by?
Very clearly, I think we are beginning to see that trend on the metals space. Again, one of those global plays where you're looking at a recovery of the global growth cycle, and with fears of the trade war kind of ebbing out a little and those kind of things, I think commodity prices continuing to be firm. I think the metals pack is clearly one space where we are beginning to see fresh longs and sustained longs.
Any view or any positioning that you're witnessing for the pharma pack? Because we've not seen any sustained buying move. There are a couple of stocks which move on back of some news, but that sustained buying that we've seen for IT this year, that's not coming for the pharma pack.
I think pharma is probably still some time away from its bag of woes, so to say. Obviously there are stock-specific triggers and stock-specific news for different stocks in the sector. But as a pack, I think the sector is a little out of favor. While, there was a time when IT and pharma would pretty much be the hiding spots for defensive plays. But I think given the whole news flow around the pharma sector, you take up any of these stocks and each of them has a story to tell. I don't think as a space we are going to be seeing that massive change of positioning there. Overall positioning on the pharma side is on the short side, barring one or two probably names, but largely as a sector it's on the short side, and I don't see any kind of rush to have that positioning getting changed.
Tushar, also if one looks at the options data, 10,000, which was the base for the March series, and we did breach that level in the March series. Still, there's a lot of open interest, sitting on the 10,000 put strike. Do you think the base for the April series once again will be the 10,000 mark?
Yes, I think very clearly that's the base, and probably not only for the April series. We could see that as a base, if things globally continue to be the way they are, barring some kind of a major global shock or whatever. I think 10,000 is probably going to be a base for this market. It's a fairly strong psychological level, and breaking that level, sustaining below that is going to be fairly detrimental to the overall health of the markets, if you put it that way, is in a fairly clear manner. So that, to my mind, is a very strong support level for the market.
What would be the resistance level then? 10,550 something you mentioned in the near term, but we've seen 11,000 level on Nifty in the past. Can we reclaim that this year?
To my mind, I think the highs that we made earlier in Jan this year is a level which is probably going to take some while to break through. So the 11,000 odd levels is something which I don't see that we are going to be getting there anytime in the short term over there. End of the year, December, November, things change. There's a sudden liquidity rush or whatever. That's a different story. But given the way things are, at this point in time, doesn't look like we're going to be breaking past the the highs of the market anytime soon. 10,500 to my mind is going to be a fairly strong level for the index to surmount. If we actually get that double-digit earnings growth, which some people have been speaking about, I think we could probably form our base around that 10,300, 10,350 odd levels and inch up higher from there. But 11,000 to surmount will take a lot of doing for it to get crossed.
Well, Tushar, this could be the year of consolidation after the stellar run-up that we've seen in the last year. Appreciate you joining us. Good chatting with you as always. Well, that was Tushar Mahajan of Nomura, clearly suggesting 10,000 will be the base for this market, not only for the April series, but going ahead as well. And he also mentioned it's difficult for Nifty to reclaim those high levels that one has seen towards the end of January. In fact, the high that on Nifty one had seen was 11,171. But moving away from that, let's chat about HDFC Standard Life. That's the stock where we are putting our focus on. And recently, that's the stock which touched 52-week high and has also seen some good gains since its listing on the bourses. Neeraj is here to tell us what's leading to this surge.
Yeah, so Navneet, yesterday a recommendation came on the channel, and which is why I thought, let me just bring up that stock. And I wanted to make a couple of points here. You know, I've annotated in Bloomberg terminology a couple of the falls, but before that, I don't know if you remember, Navneet, but around these levels, about 390 odd, was when the first murmurings of some regulatory changes came in, and the stock saw the first real dip, meaningful dip that it had all the way to 367, and people were talking about what if this dip can get enhanced. That was quickly bought into. But what I'm trying to show via this chart, the last 1 year chart, is that with this specific stock, any major dip that comes in has been bought into, and investors typically have made money. So look at the first one. This started somewhere around close to about Jan 15, 16 is when the stock started dipping, and then fell all the way 20% lower to sub 400 in that correction around the budget time. From there, the recovery was very, very strong. Let's assume you are a trader, then you've made one recovery. There was another fall which was about 13 odd %, which started moving up, and you've seen the stock head all the way to 500. It's a stock that institutional investors love. It's a stock that FIs keep on putting money in. We've seen that flow consistently. The HDFC brand name doesn't hurt, attracts blue blood, and which is why, despite being extremely expensive, a stock continues to rule at new highs. Look at this. Okay, this is the ANR, but even this will give the return potential. The 12-month target price across to the entire sell side put together is about 447. It's trading at 500 and continues to gain money. Compare that to what's happening to ICICI, life insurance, or some of the others. They are trading cheap, but they're not attracting fresh money, which is not the case with this one. Despite being expensive, continues to rise and shine. Probably goes to show that if you're an expensive stock but a pedigree stock, and if people like and it catches the fancy the way Avenue Supermarts has, or the way maybe off late Jubilant Foodworks has, or for that matter how HDFC Twins have been, this one is no different, just continues to attract investors.
Well, it's the same as its parentage. We've seen returns from HDFC and HDFC Bank in the last 5 to 10 years. Let's see whether from the insurance space, HDFC Life can reap the same returns that the shareholders of HDFC and HDFC Bank in the last 10 years have done. Okay, that's about HDFC Life. Markets are just about trading around the mark of 10,400. Just want to pull up Zenith Exports. That's the counter which is locked in upper circuit with gains of 20%. Towards the start of the show, Neeraj had mentioned about Shakti Pumps. That stock's been quite active, at least in the last 5 to 6 trading sessions. That's up 14 to 15%. Besides that, DB Realty, I think that's also surged a lot. DB Realty, let's just pull up that one. That's seen gains of around, it's off the day's high, but still sitting with those gains of 8 to 8.5%. Let's get in some technical view going on the market set, considering we're off the day's low. Richard Jain, technical analyst at Angel Broking, is joining us right now. Hi, Richard. Good afternoon, and thanks a lot for joining us on Bloomberg Quinn. Any trade that you're taking on Nifty or Bank Nifty?
Yeah, very good afternoon, Navneet. Yes, we have seen that last couple of trading sessions, it has been more of a stock-specific momentum, and it's not the index that has been moving. But no, in spite of the negative market breadth which we have seen, if you analyze some of the index heavyweights, such as maybe some of the IT stocks or even the auto names, they are showing some strength and are indicating the positive momentum. So we are not expecting any immediate sell-off to happen in the index in short term. I think 10,350 is a very strong support, and even today if we see from levels around 10,355, we have seen this pullback move. So at current levels or on minor dips around 10,380, one should look to create long positions in Nifty, keeping a strict stop loss below 10,350, and 10,470 to 10,500. I think that should be the range where one should again look to book profits on existing long positions.
Okay, that's the view coming in on Nifty. Let's also bring in Hadrian Mendonca, Senior Technical Analyst at IFL, who joins us. Hadrian, hi, good afternoon. Both Nifty as well as Bank Nifty, they've been facing a bit of resistance towards their 50-day moving average. Do you think that's going to be a big resistance level? Because Bank Nifty did breach that mark yesterday, but it's retreated from those levels.
Yeah, hi, good afternoon. So Nifty, Bank Nifty, both are, struggling to find some kind of direction around these levels. Especially, I'd like to point out, a small cause of concern that I can see on the charts currently for the Bank Nifty, especially, is if you've noticed, we broke down from a head and shoulder pattern in the first week of March on the Bank Nifty. Now, if you draw the neckline, through and through, I think Bank Nifty is exactly once again approached the neckline at these current levels. So, if for the Bank Nifty to do any kind of an up move, it has to actually go ahead and surpass above the 25,300 mark. That's when we could see some more positive momentum building in the Bank Nifty. If that is not happening in the coming day or two, I think we could see some kind of consolidation. As the gentleman on the other side said that we don't see even we don't see a lot of sell-off in the near future. I think the bias should be more about positiveness, and a lot of stock-specific action definitely has been seen, especially in the mid-cap and small-cap. The life insurance pocket is doing pretty well. The auto pocket is doing pretty well. So I think as far as the momentum is up, I think we should continue to remain long, in the markets rather than trying and short it.
Okay, that's the view coming in on Nifty as well as Bank Nifty. But Richard, coming back to you, your top trading ideas for the day?
We have a couple of recommendations on the large cap front. One is Sun Pharma. Although the stock has been showing a consolidation phase since last 1 or 2 months, but if we see the broader charts, then the stock has already given a breakout from a falling wedge pattern, which is usually seen at the end of a downtrend. So the downside seems to be very limited here on in Sun Pharma. Short-term traders can buy with stop loss below 501. We are expecting a target around 540 to 550 near term. And my second call is to go long in Tata Motors call option. We are going through call option because of the volatility which we have seen in the recent past in this stock. Prices have shown a very sharp pullback move during last week. Again, some sort of retracement has been seen in last 2-3 trading sessions, and on hourly charts, it is now trading near its moving average supports. So I think we are recommending to go long on at the money 360 call option at current price of 728 for target around 21 before expiry.
Okay.
Okay, and Hayden, what about you?
Yeah, so both are long calls from my end as well. So first is we are bullish on SBI Life. If you see, since inception, SBI Life has been trading in this narrow trading band, and in fact in a declining channel pattern. So for the first time now since the listing, the stock has actually shown signs of a breakout. So I think when we see such breakouts, one should not miss out on the bus, and I think one can start buying SBI Life at current levels and play for a target of close to 742 and keep a stop loss at 708. On the other hand, index heavyweight Reliance Industries is really showing some signs of strength here. The stock is on the verge of a symmetrical triangle breakout, and if you see the previous trend is up, and if the primary trend is going to continue, definitely there's going to be a breakout on the Reliance Industries. So I think one can buy Reliance with a target of 962 in the short term and place a stop loss at 914.
Okay, so those are some stocks to monitor. In fact, well, oil and gas is probably the story in the order of the day as well. Sharmila Joshi, independent investment advisor, joins us right now on the show. Sharmila, upstream, downstream, explorers, offshore companies, everything is in focus today by virtue of what crude has done. Let's say you are somebody who doesn't mind taking a short position also, is comfortable putting in money to work on the long side as well. What's the best bet looking at what's happening to crude? Would you, if you had OMCs, get them out of your portfolio, would you put in fresh money to work into a Reliance or some of the upstream companies, or bet on offshore companies, or do nothing?
I think that's a really tough question. Simply because, I think for the longest time I've also thought that perhaps the best is sort of behind us as far as oil marketing companies, or in fact this entire space goes, because at the end of the day we can't forget politics, and we are in election year. So I don't think we can talk from till the cows come home as to whether they do take that 1 rupee impact as has been suggested in some reports. Then what happens to the margins of oil marketing companies, or if there is that whole subsidy sharing burden, then what happens to both upstream and downstream. So I think perhaps to go short in oil marketing companies, to my mind, would be the best bet, and probably go short in HPCL.
What about the upstream then? Because if crude oil prices are inching higher, that will augur well for that.
I don't think that they'll really get too much of a benefit. So yes, it seems logically that should be the play, but I don't think that they'll really escape altogether. They will have to bear part of the subsidy burden, because I don't think that entire burden will be put on oil marketing companies. And therefore, I think HPCL, because they also have this ongoing deal with ONGC going through, as well as the fact that they will see probably a bigger margin correction, which is why I'm saying that if you had to short anything, it would be HPCL. If you had asked me on the reverse when crude prices were correcting, my best buy also would have been HPCL.
Interesting. Since we are talking of those, fuel retailers are amongst the worst performers in trade today, not coming as a surprise, but this is after Bloomberg put out that report suggesting that oil marketing companies will be asked to cut petrol and diesel prices by up to 1 rupee. Let's put on record that the oil marketing companies who've come on the channel have said that that's not the case. However, let's just talk about what the impact on OMCs could be if this does go through. Remember, it's a big if. I think Sharmila Joshi made a point that we are in an election year and can't ignore the politics. I'll be very surprised if it does happen, though, because there's a state path that the government has set itself on. But yet, let's get in Sumit Sarkar to talk about where can this price cut be adjusted for, and what's the impact on each of these oil marketing companies if indeed a move like this were to go through. Sumit.
So if oil marketing companies have to absorb this rupee 1 impact, then they'll have to do it within their gross marketing margin. That is their income that they earn on sale of every liter of petrol and diesel. Now, if you see the gross marketing margins of all the 3 oil marketing companies were on an uptrend for the first 3 months of 2018, post a big fall in the last 3 months of 2017. Now, this fall was because of lack of increase in retail fuel prices amid rising crude oil prices. Now, again, the crude oil prices have been rising, and we are already seeing some weakness, that is by around 20 basis points. The marketing margins on sale of petrol and diesel have come down in the first 11 days of 2018. So we'll have to see how that impacts. Now, if this 1 rupee has to be absorbed by the oil marketing companies, then the marketing EBITDA will come under pressure for all the 3 oil marketing companies, but it will impact Hindustan Petroleum the most, because the marketing segment contributes nearly 55% to that total EBITDA. Now, for BPCL it contributes nearly 45%, and for IOCL it contributes nearly 20%. So HPCL will see the biggest impact. Now, we exactly don't know how much the impact will be on their bottom line, but according to Kotak Securities, the earnings per share for the oil marketing companies will fall in the range of 12 to 21% if the gross marketing margins have been lowered by 50 paise. So if it has been lowered by 50 paise, then for IOCL's EPS impact will be 12%, BPCL will be 16%, and for that and for HPCL it will be 21%. So again, HPCL will see the biggest impact because the marketing portion contributes a lot more to the EBITDA compared to the refining segment. Now, we spoke to Indian Oil Corporation and Hindustan Petroleum, and both of them have repeatedly said that they have not received any kind of communication from the government on this. So we'll have to wait and watch how the gross marketing margins pan out going forward with the rising crude oil prices to assess an impact on their bottom line and on their EBITDA front on this news.
Well, remember, this is a big if. We are not saying this is happening, but if it were to happen, these are the likely impacts that could happen. Sumit, thanks for putting that into perspective. Really appreciate your time. So that's Sumit Sarkar from our research desk speaking about well, some math out there. We've anyways established the fundamental math out there. I don't think we've gotten a technical view on these stocks, though. Adrian, what do you want to come in? BP, HP, IOC, after the move that has already happened, is there a trade possibility still existing?
I think the stock has, fallen almost 8% in a single day, and after such a huge fall, I think, stocks generally set into a consolidation phase. So I think, getting into a trade right now is not advisable. I think we should wait for prices to settle down before we take any kind of call on an HPCL.
Okay, that's the technical view coming in. Sharmila, you know what, there was a time when the prices were not deregulated, which meant there was subsidy, and that burden was borne by actually government and the upstream companies. I'm just asking if this does not get passed on in some way or the other, considering this is an election year, to OMCs. Is there a remote chance that the upstream companies like ONGC would be asked to bear some burden?
It's a possibility, because I don't think that we can completely overlook it. It will, I think, largely depend on how crude prices move, and especially when you get closer to the election date. Because I think from what I can understand from the math, you still have like a little cushion by which oil marketing companies can be asked to take the loss. But I think if you face a scenario where crude goes up substantially from the $70 level, then you may look at a time when you could ask the upstreams to bear part of the cost. It's not a situation that one would like to see, obviously, because this is again something which we have seen historically happen, that you actually roll back, you sort of deregulate, and when actually prices start getting out of your control, you go back to the regulation mode. So that's clearly something that you wouldn't like to see happen, but I really wouldn't completely rule out the possibility at this point in time.
Okay, that's about the oil and gas space, but the other space which has been buzzing since yesterday, and that's the metals index. Let's just pull up the Nifty metals index. It's still one of the top sectoral gainers for the day, and the reason being that the prices, some of the commodity prices like aluminum, have been inching higher. What did you make of the news where US levied sanction on Russian aluminum maker Rusal, and as a result of which globally the prices have been inching higher? We spoke to Anil Agarwal yesterday of Vedanta, and he said that he sees aluminum prices in LME, they could touch between the range of $2,500 to $3,000 per ton. So very honestly, I was surprised that you saw these sanctions against Rusal. I mean, it did catch me by surprise, because you'd been hearing all the while of some action happening with China, and they both sides have sort of been flexing their muscle and saying things to counter each other, and you thought that that was a situation that was sort of sorting itself out. So this really did surprise me, very honestly. But I think, as you said, for Indian aluminum makers, it's a great thing, because you've already seen all the stock prices move up of all the aluminum players, whether it's Vedanta, whether it's Hindalco. See, they already had the internal fundamentals support them. I was just reading a little while earlier on your screen, that production data for Vedanta is better. So, I think that data already supported them. And then if they get supported by better prices, I think it will definitely mean more profit. So, for players within the domestic context for aluminum, I think it's definitely good news.
Looking at the stocks which are consistently making new highs, Sharmila, there are 2 or 3 that caught my eye today. One of them is Shakti Pumps. The other one is Dilip Buildcon. And yet another one is Astral Poly. Fundamentally, do you look at any of these?
I think a short while back there was a sort of a graphic that was doing the rounds with this, with the road companies, with the kind of orders that they've got in this last year, as well as what this year looks like. And I think definitely Dilip Buildcon did feature on that list. So there were companies like a KNR, there was a Ashok Buildcon, there was a Dilip Buildcon. And I think all of them are doing well today. If I'm not mistaken, IRB, I think, was on circuit a while earlier, which was a surprise, because honestly, I think it didn't really feature in this list, and their model is different. And you do have, some issues or the other with IRB. I think, you will hear some corporate governance issues on IRB. In spite of that, you had the stock hitting an upper circuit. So I think there could be some sense that you could actually that this could be the sort of pocket that you could bet on, and people are buying into road building. And I again feel that within the infra space, if I had to position myself somewhere, it would be in the road building, because I think that would be the first to sort of see the orders and see the the turnaround in that sense.
Okay, that's interesting. So that's the view. Watch out for select companies in the infra space as well. And I think Sharmila is referring to the graphic that Nikki had done some time back, wherein she had spoken about how the share of the precise companies that she spoke about, which is KNR Construction, Dilip Buildcon, and Ashoka Buildcon. Those are the 3 that actually increased their market share from NHAI in FY18 compared to FY17. And these were the winners. You didn't see the likes of IRB or NCC, or for that matter, Larsen & Toubro, bagging a lion's share of this pie. Now, before we move and talk about IT, let's talk about and shift focus to the currency market. The US dollar hasn't had a great start to 2018, declining in 2 out of the first 3 months. Is there some respite in sight, or is the pain going to continue? I think it's a $1 million question, literally so. But Saloni has some analysis on the greenback. Saloni?
So, Neeraj, the 4th month of the year has been proved to be the cruelest month for the dollar index. Now, if you plot dollar index on a seasonality chart, like here, it usually weakens in the month of April, and this trend has been continuing since past 7 years. And now, dollar index is likely to weaken and is likely to continue with its April jinx for the 8th straight year, as the index has nearly slipped close to 0.5% so far this month as well. Now, the dollar index did not have a really good start to this year, as it declined in the first 2 months out of the 3 months, and on a quarterly basis, the index is almost down about 2.5%. Now, when asked Pramit Brahmabhat, the CEO financials, about the seasonal trend of dollar index, he said that despite a tightening Fed policy, he believes that dollar weakness will continue in the near term to medium term on the back of trade war fears, and he believes that this weakness is particularly against the euro and commodity currencies, and 88.50 levels is the key support for the dollar index in the near term as well.
All right, Saloni, thanks a lot for bringing those details with regard to the currency market. But let's move on and speak about Bajaj Electricals. That's the company which has won new orders actually worth over 2,400 crore rupees. To discuss this order in further details, we're joined by Shekhar Bajaj, CMD of Bajaj Electricals. I think we've lost the line, but we will reconnect with Shekhar Bajaj of Bajaj Electricals. Let me tell you, that was the order which they won from the government of India, and they've also said it pertains to rural electrification, where the government's focus so far has been, and the EPC business unit, that's the one which has won this order of about over 2,400 crore. And nothing much with regard to the stock price movement on back of that news, but Bajaj Electricals is trading around the levels of 622 on back of that.
That's a reasonably large order. I don't remember recently Bajaj Electricals winning such large pieces as well. It's a reasonably large order for Bajaj Electricals, which was important to becomes important to just chat with the management for that brief bit. Any thoughts on this one, Shabila? This whole consumer lighting, consumer goods company actually, you know, transgresses that whole bucket.
Yes.
Do you like Bajaj Electrical?
Yes, absolutely. And I think I was just trying to recall, but I think it was a couple of maybe a month ago we had discussed this on Hot Money, you know, one of your other shows. And that was the whole point, you know, that I'd made at that point in time, that you had for the first time perhaps the consumer division as well as the EPC, you know, because at one point in time the EPC business was, you know, they had some more legacy orders which where the margins were suffering, etc. So now I think, you know, they first worked to bring that piece back in sort of shape, and then the consumer business. And I think for the first time you're seeing both sort of doing well. So yes, I think this was definitely one of the stocks that I'd liked within the consumption basket.
Okay. Anything? Sorry?
I was just checking. It's done well, actually. On,
yes. And also, I think there was some news about their whole consumer electrical business, that they had actually worked on that model and they had revamped it. And, you know, that was now beginning to show results in the numbers as well. Because, you know, that typically takes a little longer time in happening, because, you know, it's, that presence that you need to have, as well as when it actually sort of translates into better bottom lines, etc. So I think both things had begun to sort of work for the company.
Very interesting. Any thoughts here, Ruchit? I mean, maybe Bajaj Electricals is not doing too much, but a bunch of other consumer names have done well. From a Bajaj Electricals to a Voltas to maybe a Symphony, anything that stands out on the chart for you?
Yeah, although the trend for Bajaj Electricals continues to remain positive, but the way the stock has already risen in last 6 to 8 months, the RSI on the monthly charts is now trading somewhere around 84, 85 levels, which is quite a overbought zone. So I think the trend though remain positive, but the risk-reward ratio for creating fresh longs or entering fresh in the stock at current levels doesn't seem to be that favorable. So in case if one wants to buy, one should look for some kind of dip. Maybe in near future, if we get the stock around 550, 560 or 570 levels, those would be ideally good levels to enter into Bajaj Electricals. Rather from this space, I think Crompton Greaves Consumer is one of the stock that over a period of time could give good returns. The longer term charts are quite positive for this stock, and post the recent correction from 290 to 230, I think the consolidation phase is a good buying opportunity if one is looking from at least 6 to 8 months perspective. So the downside here seems to be quite limited in Crompton Greaves Consumer. On the higher side, if one has at least 6 month time frame, then the recent highs of 280, 290 I think should be tested again.
Okay, those are some technical checks on these stocks. Let's move on. The task of crossing 10,000 crores of sales revenue has been achieved despite disappointing orders for Akash missile and long-range surface-to-air missile system, says MV Gautama, Chairman and Managing Director at Bharat Electronics, in a conversation with Sajit Mangat of Bloomberg Quint. Listen in.
Today, Bharat Electronics is typically having about nearly about $100 million worth export orders, and about 17 million of it is towards offsets. So balance of that is completely the products of Bharat Electronics which we are able to export. We are now looking for increasing our international presence. Towards this, we are going to start in this financial year a couple of overseas marketing offices also. So we are going to look forward for a big leap in defense exports. Our products are required for defensive purpose of any country. So we are not involved in the offensive purpose type of equipment. So I feel that we have got a big market to capture in the coming years.
What about how was the year last year, 17-18 for you, for Bharat Electronics?
17-18, I am very happy that we took up a task of crossing 10,000 crores sales revenues. So the company scaled new heights. Today we joined the league of companies who have revenues more than 10,000 crores. We also had a very good order booking. We were able to capture nearly 10,000 crores of orders again. However, this was a little shorter than what we initially planned. So two of
Okay, that's of course BEL, but we're talking about Bajaj Electricals. I think Mr. Shekhar Bajaj, the CMD of Bajaj Electricals, joins us right now on the show to talk about this order win. It's a large order win, Mr. Bajaj. I mean, congratulations on that. Can you tell us what is this order win about? What's the nature of this order?
Yeah, see, this is something which we are, I think, clearly market leaders in doing rural electrification, and therefore this is something under the Saubhagya scheme, Rural Electrification Corporation. We've got the order for, this is for Eastern UP, which is covering Varanasi, Balia, Azamgarh, Jaunpur, Fatehpur, Pratapgarh, and the total order book is about 2,000 crore plus GST. So it's 2,400, but that includes GST. So without GST, it's about 2,000 crore, and it has to be done in 15 months. And we have already done 25,000 villages. We have electrified. So as per the Prime Minister's objective that by 2019, before the election, the whole country should be electrified. And we are playing our role to see if we can support it in electrifying the country. And therefore, this order would have to be finished before the elections are on.
Okay, so one part is, the fact that you have a strict timeline in which to finish this. The second part is whether these orders, which are now coming in the Saubhagya scheme, come in, Mr. Bajaj, at IRRs or margins the way you would like them to, or because of the size of the order, you typically do it at a slightly lesser profit percentage or margins?
No, we don't do that. We keep our minimum levels same. On the other hand, the bigger the order, the more risk is there. So we don't reduce our margins because, when you do such a big order, there can be some slippages. So therefore, there's no reason for reducing margins. So margins are kept sustainable, which is there. And we've said very clearly in the EPC business, if we don't make our minimum margin, we will not do that business. So luckily, this order has come at our minimum required margins, and we hope that 15 months we should try to finish it before time.
Bajaj, what are those minimum margins? If you could share the numbers, is it between 5 to 6%?
No, I can't share the numbers. Otherwise, my competitors also are hearing it.
Okay, no problem, Mr. Bajaj. That's a very pertinent point you've made. But tell us, besides the state of Uttar Pradesh, where you won the order, any more orders of similar nature from other states that you've bid for?
Yeah. We've got our major business for the last few years has been from Bihar. This is the first big order we've got from UP. We are also doing business in West Bengal. We are doing business in Karnataka. This is the first big business we've got from UP. And UP, according to our feedback, is that there's a lot of new orders which are in the pipeline, and therefore let's see who gets those orders. But I think we've got now enough in our plate, so we have to make sure that we do it properly in time and do it efficiently and make some money.
Mr. Bajaj, I just have one question. Unless I'm very wrong, at least the estimates are that for FY18, I know you can't give me exact numbers, but just hear me out. The estimates are that maybe for FY18 you would probably do revenues closer to about 4550, 4600 crores. I heard you mention that you will have to finish or execute this order before the elections, which would presumably mean that a large portion of this order will be finished in FY19. Am I to assume that there will be a big bump up in revenues for you as a company as a result of this, or any other order win that may happen within this Saubhagya scheme, which you anyways have to finish before the elections?
See, actually, because of our good performance in 17-18, our order book on power distribution had gone down, so we were requiring this big order so that at least 700-800 crores out of our existing, out of this order of 2,000 crore plus in GST, with excluding GST, at least 700-800 should be in 18-19, and the remaining will come, of course, in 19-20. So that was very important. So I don't think, I mean, as it is, we are looking at a growth, as I said, double-digit growth is anyway expected in both the EPC and consumer product business, and therefore this order was very important to sustain our growth.
You are saying that the double-digit growth will happen as a result of an order like this. This is not in addition to an...
I don't, because numbers have to be seen, so I don't make very, very high numbers and then say, oh, sorry, we could not make it. I'd rather that as things progress, you see that numbers will come. So what you are saying is possible, that when we are saying double digit is because of this. No, we would have done double digit. It would be maybe higher double digit. We don't know exact numbers. I'm not mentioning, but if we are saying double digit instead of 12%, if it is 18%, then you say still double digit only. Unless we go to 100%, then it becomes triple digit. So double digit doesn't mean 10, 15%. It can be 25%, it can be 30%. Who's saying that?
Yeah, no. Typically, managements, if they score over 20, 25%, tend to give out that it's a strong 25% growth, Mr. Bajaj, which is why. But maybe we'll talk about these numbers with you once you come out with your numbers. I'm guessing you're in a silent period. You can't talk more.
When we come out with numbers, then we'll feel more confident that yes, that double digit will be a little better double digit, and then it can be high double digit, whatever it is.
Well, so as they say, inshallah, hopefully it is much higher than what you think of. Thank you so much, Mr. Bajaj, for joining in today, and all the best. That's Bajaj Electricals, not quite giving a number, but I don't blame him. Would be in the silent period right now. Sharmila, before we thank you, I guess a bunch of other companies will get orders under this scheme, and I'm guessing that the order timeline completion would be very, very stringent now.
Yes, I mean,
so bunched up orders in FY19 then?
Looks like, which is perhaps could also be explain the reason why all the road companies are going. Because, I think that is typically somewhere which you would also want to showcase, before an election, because these are the visible things. Electrification, roads, these are the visible things. So I think 2019 could well be an interesting year.
We were playing that conversation with BEL before Bajaj Electricals came in. I think Sharmila likes BEL as a stock.
In fact, I liked it because I was reading this.
Okay.
This very fact that where they said that they've, and I saw the stock price and it's very close to its 52-week low. And it's your preferred play, in the defense sector. And I think there again, their order book is very healthy. It is just that, you had a couple of slippages in orders, and which is why you saw Q3 suffer. But, that is not something that's going to be endlessly the case. And you will see these orders getting done. And, these are again orders that are not going to go to anyone else. So, they do have that advantage like that. So, I think at a price of about 145, it's a clear buy to me if you're a long-term investor.
Okay, that's Sharmila's top pick on BEL. Sharmila, thanks a lot for joining us and taking us through your views on the different sectors of the market. Nifty is still hovering around the mark of 10,412. Bank Nifty is down almost 130 points in trade. It's time for us to head into a short break here on Countdown. Don't go anywhere. On the other side, we get you the Fab Four stocks of the day at 3:15 p.m. We also tell you what the dealing rooms are recommending in trade and some closing strategies from Siddharth Sadani of Anand Rathi will also be joining us on the other side.
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार. Just working on my expansion plan.
Funding का चक्कर.
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख. Look. This bridge gets you in touch with interested investors. Funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल.
हाँ.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
RP Sanjeev Goenka Group. Growing legacies.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Welcome back. You're still watching Countdown with us. Well, as promised, let's get you the Fab Four stocks of the day. And as usual, Yash Upadhyay joins us to take us through those stocks. Hi, Yash. Good afternoon.
Good afternoon, Navneet. So we kick things off with Tata Sponge Iron. This one had surged as much as 5% today after brokerage firm Centrum Broking upgraded their rating on the stock from hold to a buy and have also revised the target price to 1165, indicating a further upside potential of 13% from the current levels. Volumes too came in significantly higher at well over 5 times the 20-day average. Associated Alcohols is on a run of its own. It's up as much as 10% today after Dolly Khanna picked up 1% stake in the company as per the latest March 2018 shareholding pattern. But that apart, the stock has been gaining for the last 7 trading sessions and has managed to return in excess of 22% in April alone. HFCL is up as much as 4.5% today after the telecom equipment manufacturer said that it has received an advance purchase order worth 579 crore rupees from state-owned BSNL for setting up of a 2G network in the state of Assam over a period of 5 years. And finally, offshore companies and oil exploration companies were buzzing in trade today. Aban Offshore had gained as much as 7% after crude oil prices surged more than 3.5% to their highest levels since 2014. Back to you.
Well, interesting. Associated Alcohols. It didn't react too much in the morning, but I think during the course of the day picked up some strength. Before we get to our experts, one more voice coming in from the defense expo. Ashok Leyland wants to move up the value chain and focus on sophisticated weaponry. Sajid caught up with the company's MD Vinod Dasari at the Chennai Defense Expo. Here are what he had to say.
I think it is a very exciting journey ahead. About 4 years ago, we restructured our defense business to have a very clear focus on not just selling logistics vehicles. We are one of the world's largest provider of logistics vehicles to the armed forces, primarily to the Indian armed forces. And we said, why should we only move people? Why not everything else that the army requires to move? So rather than compete in 2% of the capital expense of the Ministry of Defense, we now compete in about 22% of it. So giving us a much larger canvas to play on. So everything that is required to move, whether it's a bulletproof personal carrier like this, or carrying missiles, or carrying guns, or carrying radars. So what used to be 4x4 has now gone to 6x6, 8x8, 10x10, 12x12. And defense takes a long period. But once it's there, it stays for a very long period of time. Many places we are very proud that where Indian Army used to have to import, we've been able to substitute with local. So it is one of our fast growing businesses. We have now almost 800 crores this year. We will be one of the largest private players for the Indian Armed Forces. and we have won several tenders. I think just in the last 1 year, we have won 12 out of 15 tenders. And these tenders are for developmental orders, and as they start getting converted into real things, you will see just this much will give us a cumulative revenue of about 5,000 crores in the next 5 years or so.
Orders in the last 1 year gave you order book of nearly 5,000 crores over the next 10 years. Next 5 years. Is that an ongoing thing, because you're going to be participating in now a wider variety of vehicles here? So what kind of opportunities that throw in? Are you being able to capture the entire 22%, or you're just now in a process of creating prototypes and then showcasing it?
So these are development orders. Okay, if I add up all the projects that we are working on and we get all of these orders, then we are easily more than 50,000 crores. But it's not like I do a project and immediately it works. So first step is that there is an RFI, then there is an RFP, then you make a vehicle, then there is a development order, then there is trials and so on, and then it gets into a bigger order. This is a long gestation business, but it is not cyclical. Once you're in for a very long period of time. Second thing, it gives you significant opportunity to export. Like this vehicle that you're talking about behind us, there's already a very good demand for export outside into many countries nearby as well as far away. So we're looking to build this business based on our core competency of automotive technology and not get into things like submarines and missiles and guns and all of that. We will not get into that. We'll stick to our business here.
Okay, markets are at 10,421, very close to the high point of the day, which was 10,428. And just want to highlight IRB Infra, which is now again at day's high, and DB Realty. Both these stocks have had a great session. DB has also gained about 9% in today's trade. Let's bring in Siddharth Sadani, Vice President of Equity Advisory at Anand Rathi, who joins us now. Hi, Siddharth. Good afternoon. Good to have you on the show. Wanted to start the conversation with these realty and construction players, where big moves have been seen from the likes of IRB Infra as well as stocks like DB Realty. Is there any merit in the move that we've seen in both these stocks today?
Hi, good afternoon. Thank you for having me on the show. Well, in terms of construction play has been really doing good. On top of it, real estate play has also been doing good. But real estate, there is some kind of a worry in terms of inventories are concerned. The biggest thing is the big inventories which they have piled up. I think that can be a big worry for the companies. Leaders like DLF, which are coming out from their non-core businesses, I think maybe now 2 years now, 2 or more than 2 years, they have been coming out of all this and focusing on the core business. So I think one should stick to the leaders. In fact, in the construction and real estate play, we don't want to find out we have infra play with us. But if I want to play out real estate in India, I would like to play out with housing finance companies like of Indiabulls Housing Finance, rather than playing out with real estate plays, where I have to worry for the balance sheets and how stretched they are and what's the loan book and what's the inventories they are holding up. I would like to play out with housing finance play.
Okay, so that's some views. Siddharth, a clutch of stocks hitting new highs today. Any thoughts on that? Shakti Pumps, for example?
Of course, rural theme is on the go. Shakti Pumps we had a coverage on, but it has already surpassed our targets. And we still believe in the agri side. Shakti Pump is one of the leading players which can really give good performance in coming 6 to 8 months. Likewise, Escorts is one of the play in the tractors, which is again a rural play, agri play to look out. We have one company, DCM Shriram, which is into chlorovinyl business as well as agri business. So we believe DCM Shriram has a good potential to go up, although from the top it has corrected, but from here on we believe that there is a good potential of this company to deliver strong management, good commentary, overall a steady ship to play in these kind of markets.
Okay, stay on, gentlemen. Hadrian and Richard, stay on as well. But it's 3:15, that time of the show, wherein we first get you what dealing rooms are recommending in the session today. Darshan and Yatin join in with their channel checks. Good afternoon, both of you. Darshan, let's start with you first.
Good afternoon, Neeraj. One of the stocks that's been actively spoken about today is Oracle Finance. Doesn't move too much, not one of the most liquid names, but it's up 0.5%. There's a buzz of a potential corporate announcement that could come in soon. So, after a while, there is a little bit of buzz that's happening on decent volumes also today. The next one is Bharat Forge, which is also pretty much flat in today's trade. But some of the domestic funds are looking to accumulate this counter at lower levels. So that's something that we hear. And finally, the last one is DCB Bank. This time around, the counter is up almost 3.5%. A couple of dealing rooms where I spoke to do indicate that there is accumulation happening on the anticipation of a strong fourth quarter number that could come in. But Yatin, what are you hearing?
Well, if you look at a few stocks, SREI Infra, that is one stock wherein dealers are recommending a buy based on F&O trends, and dealers expect some bit of trading upside here. Of course, the stock has corrected substantially from the recent high, and this is one repeated recommendation coming in from SRE Infrastructure. Apart from that, do watch out for Kaveri Seeds. Also, that is one stock wherein dealers are recommending a BTST kind of a strategy based on, again, some bit of technical trends here. Of course, the volumes also have picked up as far as this seeds company is concerned. And finally, in the cash market segment, watch out for Suven Life Sciences. Dealers are recommending accumulating this small cap pharma name with a 10 to 15% return potential.
Thanks a lot for that, Yatin. So those are some stocks to watch out for. We were talking about Shakti Pumps in the dealing room segment yesterday as well, yesterday or day before, I don't quite remember. But we were talking about one or two stocks entering or coming out of the ban. Wow, 13% for Shakti Pumps. That's a big move. Actually, Ruchit, if I can request you to look up the charts of Shakti Pumps.
The last few days, the stock has shown a very good up move from 560. If we see the volumes of the stock during this up move, the volumes are quite high, but compared to what we usually see on a daily basis. The stock is trading at its all-time high. Even the previous corrections were quite far, so it's very difficult to give any kind of target projections for this. But no, the best strategy in such kind of moves is to keep trailing your stop losses higher if you are already having any buy positions. So now the support for the stock should come in somewhere around 675 to 680. So for existing long positions, it would be prudent to keep revising your stop loss as the stock moves higher and continue to ride this trend.
Okay. What else can be trending tomorrow, Navneet? What's the list looking like? Stocks that could come in or out of the ban?
Well, Neeraj, this series has been about not many stocks into the F&O ban. So far we have Jet Airways and Balrampur Chini, which entered into the F&O ban for today's session. Jaiprakash Associates, that's the one which is featuring in my list. There's a lot of open interest accumulation that has taken place. Plus, it's also trading very close to that mark of 95% of the total open interest as a percentage of MWPL. 89.90 was somewhere about yesterday. And with today's accumulation of OI, which is being added, looks like it could breach the 95% mark for tomorrow's session.
Well, let's wait and watch what could happen to JP amongst other stocks. 1518 or 318, almost the time of the show when we get you closing strategies, so might as well do that. Adrian, to you first, your top closing strategy today.
Yeah, I'll go with an IRB Infra. I mean, we've spoken a lot about it already on your show. Throughout the last 15-20 minutes, but I think something very huge is happening in IRB Infra. The stock has been consolidating for the past 5 years now, and that is a lot of consolidation, a lot of to and fro in that trading range between 170 to the breakout that we have seen around 255 today. So I think if the breakout holds true, I think IRB is all set for another 25-30% upside from here on. So, whenever you see such a breakout, I think it is advisable. Please do not miss such opportunities. One can definitely enter IRB infrastructure. I know it's already up 10%, but nothing to worry about. If you get IRB close to a range of 260 to 275, I think that could be an apt level to enter. And play for another 20 to 25% upside from here on. So IRB is something that I would really put my bet on.
Adrian, is that a positional call?
Yes, absolutely a positional call.
Okay, that's a buy on IRB Infra. Ruchit, what about you? Do you have any BTST or STVT strategy for tomorrow?
Anit, I would again recommend Sun Pharma. Although from a short-term perspective, I have given a target of 540 to 545. But if I look at the hourly charts, then in last 1 hour, the stock has shown good volumes, and the the resistance on the lower time frame charts of 519 was there, and the stock seems to be giving a closing above that also. So I think in tomorrow's trading session itself, we should see good momentum. From a BTST perspective, I would recommend targets around 532, which is the 200-day moving average on the daily chart, and one can buy with stop loss below 515 from a BTST perspective. Otherwise, positionally, as I said, we are expecting target around 545 to 550.
Okay, Sun Pharma is a buy call from Richard's side, and let's now get you some fundamental call as well. Siddharth, when we started the conversation, I asked you about the construction players, and looks like you're bullish on Ashoka Buildcon.
Yes, Ashoka Buildcon in the infra space looks very interesting. If you look at the construction revenues, it has really seen a substantial jump in the construction revenues. EPC order book has been also sizable and becoming healthy. They've been getting good T&D orders. Overall, if you look at the balance sheet is also well maintained, and it is going good. Overall perspective, if you look at, we can expect a good margins in the EPC order book size also. Overall perspective, what you can expect is strong traffic growth also, which is coming out in India, as Ashoka Buildcon will get toll fee also. So we can expect a good traffic growth and toll fee collection to be higher from what it was last year. Ashoka Buildcon in the infra space looks very interesting to me, with a target of 287. However, it has gone up by somewhat 2-3% today, but I think 287 seems a nearby target, and we believe that infra space 2018 will be the main theme.
Okay, that's a fundamental buy call coming in on Ashoka Buildcon from Siddharth's side. Can we pull up Praxis Home Retail? That counter is now locked in upper circuit of almost 10%, and just gone up. Very sharp move has been seen in that counter just in the last few minutes of trade. I'm talking about Praxis Home Retail Limited, a company which is trading somewhere about closer to levels of 228 or thereabouts. Besides that, well, even United Spirits has seen a good move in the last hour of trade. United Spirits is trading somewhere between gains of 2.5% to 3%. Richard, if I can come to you on the charts, United Spirits 3.5% higher. Would you take a bet here?
Yes, definitely. The momentum seems to be on the positive side, and if we see recently, the stock has also given a breakout from its consolidation phase. Targets on the high side, we are targeted around 3650, 3660, because that was the gap area which was created on 24th of Jan. So I think that gap would be filled in next few trading sessions. So at current levels, one can go long with stop loss below 3325 for expecting target around 3620 to 3630.
You know, then the other one, Navneet, which continues to rise and shine, is Titan. I don't know if you've already spoken about it today or no, but the likes of Titan, HUL are hitting fresh highs. And I can understand, I mean, HUL has not really had a big move, but Titan continues move in the last few days and rises in today's session as well. 980 today, a couple of percentage points higher, and a bit of a late surge in the last few minutes. Hadrian, two names, large companies, but continue to rise and shine. Would you trade either of them?
Yeah, I'd definitely trade Titan. In fact, after today's move, we are seeing another consolidation breakout on a Titan. If I'm not wrong, we had a conversation of Titan in I guess in the previous week, where the stock was actually seeing some kind of selling pressure. But I think it has very well weathered off that sell-off, and I think it has also broken out. So we are seeing another 50 to 60 rupees upside from the current levels as well. So Titan would definitely be a stock that I would like to trade on, and in fact could see a target of close to 1030, 1040 plus.
Interesting. Siddharth, what have you guys been telling your clients to do with, say, for example, a Titan, or actually an HUL? I mean, some pretty crazy levels out there.
Can I throw in Jubilant FoodWorks?
Okay,
as well?
yeah, please do. The more the merrier.
Neeraj, and that is what the main core infra and consumption will be the main themes for the year. And we believe that these stocks are moving on the back of consumption only. HUL as an FMCG play where we can see rural growth coming. Titan has its own story that organized jewelry space has been really gaining a lot of prominence, especially after the demon and everything which happened, I think Titan has really created a lot of wealth for investors also. It's a portfolio stock altogether, and it has been growing inch by inch every quarter. So we believe Titan is a good stock consumption. And if I want to pitch on again a consumption play, apart from these two which recently everyone is discussing, I would like to pitch Dabur India. Dabur India looks one of the consumption play on the back of Ayurved natural and herbal based products. 70% products are natural and herbal based, and we can expect a strong margins, 12 to 13% volume growth for the company going forward. And this doesn't have much of a competition and would not impact by Patanjali and other channel distributions. I think Dabur with a target of 400, one of the consumption play, a domestic consumption play, looks very interesting.
Right, and Dabur is doing well too in today's session. Pull up Bata as well. I think that's also surged. About 2.5 to 3% gains have been seen, inching very closer to the 800 mark. Very quickly, Adrian, on the charts, any call in Bata India?
Yeah, definitely one should continue to remain long. In fact, it is broken above the 780, 781 resistance zone. That is the previous peak which it hit in the first week of January. So I think once we see closing above the 780 levels, which I think it should be able to do today, I think the stock can once again go ahead and reach out to its all-time high levels. So I think one should continue to ride the momentum on Bata India.
Okay, that's the call coming in on Bata India. And Siddharth, before I let you go, any call on Bata India that you have?
Well, Bata has already achieved our target, and we believe that Bata as a expansion play and the kind of focus which management has on the Indian business, I think it will really definitely do good in terms of expansions, and we can expect us some expansion in terms of margins also going forward, operating margins. So Bata is in the consumption play is definitely good, but I would like to again add up one point here. Mirza International instead of Bata is more better in terms of opportunity in terms of business and its dynamism and overall penetration in the market. So Mirza International looks better and interesting than Bata.
Thanks a lot for joining us today and taking us through your top calls. Well, just 2 minutes to go from markets to close. Let's head across to Neeraj to find out how today's closing is panning out. Neeraj, off the day's low, but positive closing at least for Nifty Sensex.
Yeah, but ho-hum, isn't it? I mean, hardly any movement out here. Nifty Bank, I think the private banks were the key culprit, ending down about 0.5% and kind of keeping a lid on the bourses today. At some point of time, we'll also tell you what the US markets and the world markets are doing. But the mid caps and the small caps in today's session too, very, very flat. Hardly any moves here. I mean, don't be disappointed with the red. It's just a flat close that we have today. What's moved and what's not? On the gainers side, we probably have some technology names. Yep, TCS right up there. Sun Pharma, I think this whole market is split whether Halol has eventually gotten that clearance or no because of one injectable getting or one tablet getting that clearance. Reliance Industries has gained quite a bit. And as I said, technology, so Infosys right up there. And we don't have HCL Tech in this list, otherwise that was a top gainer on the Nifty. The losers, oil marketing companies. Again, on the Sensex, not enough presence, but on the Nifty, all three are present and they are down and out in the session today. Adani Port down about a couple of percentage points. And banks, look at this cluster. Yes, ICICI, Axis, HDFC. So financials have had not the best of days today, but of course not as bad as what's happened to the oil marketing companies. Having said that, the market breadth too iffy, Navneet, but enough movers and shakers.
That's right, Neeraj. There were enough movers and shakers in the broader markets. Let me start off with TVS Electronics. That's the counter which was locked in upper circuit. In the second half of the session, you saw the move coming in. As you can see, the intraday chart 20% higher. IP Infra was quite active in today's session. It touched its fresh 52-week high. The top gainer among the F&O securities as well. And in the same space, you had DB Realty. That also had a good session. That counter was up nearly 9%. Shakti Pumps, the counter 500, which has been pretty active in the past few sessions. Today it touched its fresh 52-week high. That saw gains of nearly between 12 to 13%. In the second half of the session, or rather last hour of trade, you saw United Spirits also surging 2.5 to 3% higher for United Spirits. And you have something like Shrey Infra. This was up 5% in yesterday's session. And today also the buying momentum continued here. And SBI Life was the other one which saw some gains in today's trade. On the losing side, couple of your oil and gas, as Neeraj already highlighted, the oil marketing companies, but Chennai Petro, something like MGL, which was down for the third straight session. By now we know the reason why it fell, because the promoter entity sell at a price of 905, and also you had NCC, which was pretty weak in today's session. Well, that's about the broader markets, but let's also look at how the advanced decline ratio panned out, considering we're looking at the broader markets. And I guess it has been in favor of the declines. As you can see, this is the intraday chart. When we opened, it was in favor of the advances, but the selling pressure just continued in half an hour of trading. And towards the end also, as you can see, there were more declines on NSE as compared to the advances. Pull up the contributors list among the Nifty constituents, which gives you a better picture as to which were the stock which capped the moves on the upside. And clearly it was something like BPCL, heavyweights, ICICI Bank, State Bank of India, which have been surging in the last 2 to 3 sessions, saw some bit of profit booking, and also HPCL. On the gaining side, your heavyweights like Reliance Industries, TCS, Vedanta, Infy is going to be a big one. Actually, it comes out with its numbers this week, so watch out for the entire IT space. The Nifty IT was also up about 1% in today's session. Before I get some closing thoughts from our technical experts, let's just check how the participation panned out. Remember, the turnover has been pretty muted. Gone are those days when we're looking at 35 to 40,000 crore of turnover on NSE cash. So a little bit higher than yesterday. It was something about 27,700. Today it's 29,000. But definitely F&O turnover on the NSE cash side has picked up. Yesterday it was something like 5.5 lakh crore, and today it's over 7 lakh crore. Well, let's get you some closing thoughts going from our technical experts. Hadrian, I'd like to come to you first. What would be the approach tomorrow? It's Thursday. We also have the Bank Nifty weekly options expiry coming by. Would you take any trade in the opening for Nifty or Bank Nifty?
Yes, I would, definitely not have a very, strong positive, approach towards the Nifty or the Bank Nifty, mainly because of the Bank Nifty, because the cause of concern that we already spoke earlier in the show, that's showing, because Bank Nifty has been a drag throughout the day today. If you do a Bank Nifty constituent analysis, and if you see ICICI Bank, if you see HDFC Bank, and if you see SBI, all these three heavyweights have failed to actually surpass previous days, intraday highs. So which means the momentum is slightly fading away. And if these three heavyweights are not going to perform, I don't think so Bank Nifty would, make an attempt to move higher. So, these three stocks are very important for a participation for a strong up move for a Bank Nifty, which would eventually help the Nifty as well, because 30% of financials are in the Nifty. So I think Bank Nifty is something that I would be very careful about in tomorrow's trade.
Okay, watch out for Bank Nifty for majority of the session. Actually, even towards the end, it closed with the cuts of 0.5%. So the kind of gains that we've seen in the recent past, today was the day for some bit of cool off for Bank Nifty. But Richard, what about you? What would your approach be to trade tomorrow morning?
So now the 10,350 support that we were mentioning about, that has been held in today's trading session quite well. So till the markets are trading about 10,350, the biasness should be positive. I think we would approach higher levels around 10,470 to 10,500 range. Now what should be bought for this up move or maybe tomorrow's trading session? I think IT clearly would tend to stand out, because the way the Nifty IT index has given a breakout from a consolidation phase or from a falling trendline resistance, I think this would be the sector, at least for next 2-3 trading session, which would show outperformance. Amongst other heavyweights, Reliance Industries and Sun Pharma, these are the two names which I think should move higher in tomorrow's trading session as well. So I would focus more on IT, Sun Pharma, Reliance Industries. These are the few pockets where I think the positive momentum should be built on.
Okay, focus on Reliance Industries and Sun Pharma for tomorrow's session. Richard as well as Hadrian, appreciate both of you joining us and taking us through your technical views on the markets. Well, with that, it's a wrap on this edition of Countdown. Up next, we wrap up the day's trading session and BQ Market Wrap. So stay tuned to Bloomberg Quint Live.